Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Bob Scarborough.
And we are the FAIRtax Guys. You're Banner, and I've got Fat Albert here again, so we're all set together.
So
yeah.
Candy, I was thinking about trying to place it on the roof of my vehicle at the glass right above, so people could see it when I was coming down the road.
Well, kind of Happy New Year to you, even though this is the second program of the 2023 calendar year. It's we've been saying Happy New Year for a while here, so we'll just we're actually recording this before the new year, so there it is.
There you go. Yeah, we are bending time, as it were. Back in the good old days, if you thought about bending time, people would think you'd crushed your watch.
Yeah, well,
here we go. So we want to go to a future that has the FAIRtax in it.
Yeah, we'll crawl into a silver DeLorean and take off. Except they went backwards, though, didn't they? I'm trying to remember that old movie. I think they did go back, but
they did, Back to the Future. And then when they were back in the future, they went forward to the future from way back.
Well, yeah, let's go for a future that has the FAIRtax in it, and the IRS is no longer around, and everything is good.
Yeah, I'm excited about it. It's going to be a good year, Bob. 2023
so.
Good in the neighborhood. Yes,
well,
sir.
I'll tell you what, you're not going to believe this. Okay, I say we're recording this a couple of days before the new year. We record 2 episodes at a time. So last week with Steve Hayes, and this one was recorded in the same session. And both of these recorded before the new year. But I looked at Congress.gov just for the fun of it. You know, a couple of weeks ago, we did the Tax Reform Hall of Shame.
Yeah.
And went through some pretty good stuff there. And with a week, literally around a week left in the congressional session, they are still introducing bills to change the tax code. And so
they're showing us that they're getting it done. They're getting the job done.
I got a couple of them here that you ain't going to believe. This is, in fact, if we had been recorded this in time, if this been introduced in time, it was introduced on the 22nd of December, with a week left in the session. HR 9680 to amend the Internal Revenue Code to establish a flat tax and for other purposes. That's Louis Gohmert from Texas.
We need to get him on the phone. Let me get that. Let me make a note here. Call Louis. Oh, don't do the flat tax, bro.
Yeah,
I'm going to make a note. I got a note here in my phone book to call him and say, what is going on with you, man?
If I'm not mistaken, he was at one time a FAIRtax supporter and FAIRtax co-sponsor. Now, don't quote me on that, but I'm just relying on an old man's memory. I think he was one of the. I know that Ted Cruz was aboard at one time out there in Texas. And I thought Louis Gohmert was as well. I might have to go back and research that. So don't quote me on that if I'm wrong.
I'm just wondering how you can be for something as revolutionary as the FAIRtax, a tax on consumption, eliminating the Internal Revenue Service and the income tax in one fell swoop. I don't see how you can go back on that if you understand.
Why
would the flat tax be more appealing? Because Internal Revenue Service is still got the light on over there.
Yeah, I think Senator Cruz has gone over to the flat tax side as well. But there it is in black and white with a week left in the congressional session. Louis Gohmert introduced HR 9680 to establish a flat tax and your favorite phrase, for other purposes. How crazy is that? Okay, let's move on here. Here's another one that was introduced the day before, the 21st of December, by a Representative Terry Sewell of Alabama. This is HR 9668 to amend the Internal Revenue Code to provide for school infrastructure finance and innovation tax credit bonds. You want to figure that out, or you want to call Jade Wally?
Let's get Mr. Wally on the phone. Dr. Wally.
Yeah, I'll tell you what, we had some fun with him a couple of weeks ago too, when he was trying to role play that. If you didn't see that episode, you need to go back and check out the Wally's World, where they tried to replace the fair tax with an income tax. That's
episode 348, I believe. Yeah.
yes, I think that
348.
was, but that's pretty good. But now they're going to amend the Internal Revenue Code to provide for school infrastructure finance and innovation tax credit bonds. Now, I'm not sure how tax credit bonds work. I mean, I kind of know how bonds work, but I'm not sure how you tie them into tax credits. But I guess we'll have to ask Representative Sewell how all that works. Okay, this one you knew this was coming. Okay, HR 9640. This is the Presidential Tax Filings and Audit Transparency Act of 2022. Representative Richard Neal of Massachusetts. Do I need to read
start
that
over again from the beginning?
Okay, the title of this one is the Presidential Tax Filings and Audit Transparency Act of 2022. And you open that up, and I'll just read you the summary. I'm not going to try to get into the text and read it all. This bill requires the Internal Revenue Service to conduct an examination to determine the correctness of a presidential income tax return as rapidly as practicable after it is filed. The IRS must disclose and make publicly available on the internet an initial report, periodic reports, and a final report on the examination of such tax returns. Do you think they have a particular former president in mind for this one?
Well, what I think is if you're going to run for president, you just might as well dump all your documents on the front doorstep there of the public square and be done with it and forget all of everything else, because it's going to come out anyway at some point. I mean, the precedent with with all that's going on with former President Trump has indicated to me that you're going to be raked into the fire pit of transparency. Not that there's anything to hide. I mean, I think certain things need to be private, and I think our finances certainly need to be private unless we're running for public office. Now, this is something that has always bugged me, and I don't want to jump out in the middle of Congress.gov and pose this question. But do you think that the presidents that have had to come under scrutiny of their finances wouldn't like a little privacy and see the fair tax as a way to and this is something that may be a problem for everybody at some point in time. If they can do this to a president, why wouldn't they want to try to do this to you or me or anybody else?
Just if they start trying to apply this to all of the Congress critters, then they may get their attention.
Sure.
The Speaker of the House, the Senate Pro Tem, all folks like that, the Vice President as well. But
they turned representing us into a career option.
Make every single member of Congress, put his or her tax returns out there on the internet where all the world can see them. And the problem, of course, is that they will be politicized on both sides of the aisle. The Democrats will be trying to find stuff wrong with the Republicans and vice versa. And it becomes just a giant political weapon that both sides are constantly hitting each other over the head with. And hopefully, maybe after enough welts, rise up on their forehead, they'll figure out this is a rotten system. Let's do something different. We can get rid of that and replace it all with a fair tax.
Exactly.
There we go. So that's it. The Presidential Tax Filing and Audit Transparency Act. Now, believe it or not, they've still got. Oh, I don't think I mentioned what we do. We put Internal Revenue Code in quotes at the top of the search bar at Congress.gov. And here, with just by the time this airs, the congressional session will be over and they have a new one in session. But as the time we're recording this, 2,141 hits on that search, and so that's just an amazing number of
all those entries will go away at the end of the year, right? At the end of the session.
Oh yeah, we'll start over again with the 119th Congress, which is in session now. So hopefully next week's Fair Tax Power Radio will have the first set of Congress critter tax proposal changes in the new Congress, and we'll see what they're up to. Maybe we can find the definition of municipal solid waste being changed again already, although that may take a little while. Who knows? But two more I want to get to real quick before we get into the rest of the program today. S 5349. introduced on the 21st of December, a bill to amend the Internal Revenue Code to modify certain provisions relating to the taxation of international entities. So,
Nation of international entities.
That's looks like a corporate tax or something. And one more real quick, HR 9629 to amend the Internal Revenue Code of 1986 to impose a tax on employers whose employees receive certain federal benefits. Again, there's no text in that, so I can't go any farther than that, but that's HR 9629. So if your employee gets a certain federal benefit, and it doesn't say which one, then we're going to tax the employer, which is going to raise prices for everybody when you raise taxes on businesses. You think they'd figure that out?
Well, and at some point in time, the businessman is going to say, how can I do this with less people? Or without somebody who may carry that particular baggage of federal, benefit with them.
All right. Well, that's it for the FAIRtax Power Radio Congress.gov segment for the 117th Congress, or 117th or 18th, whichever one it is.
It's one of those Congress.
I can't ever remember. Yeah, this is the 117th, so the 118th will be the one that's in session when this actually airs. But I want to go back to something that Steve Hayes, if you missed last week's program, we had Steve Hayes, the president of Americans for Fair Taxation, on with us, kind of asked him for the state of the fair tax. And one of the points he made in his address was that he thinks that the fair tax is going to find more favor in Washington than it has, simply because Social Security is going broke. And there was an interesting article that just came out in the Epoch Times online that basically says that Social Security is in more trouble than we thought it was. A new Congressional Budget Office report says the outlook for Social Security is even more dire than we already knew it was. And without action to fix the situation, quoting this thing now, it says huge benefit cuts in the area of 23% for recipients will begin in 2033. That's just 10 years from now.
Right.
And preventing those cuts will require massive tax increases for working Americans beginning not 10 years from now, immediately.
Well, it's going in the trust fund.
See, they say that the benefits have to be paid out of the trust fund. And the deal is that the money that is coming into Social Security and Medicare as well, for that matter, through the payroll tax is not sufficient to cover the benefit. So they are exhausting this trust fund because they're paying out more than they're taking in. And read a little farther down in this article, and it says that the law requires that the benefits be paid from the Social Security program. So when the trust fund is gone, then the only money you have left to pay benefits is what's coming in taxes. And that's not enough to cover the current level of benefits. You're going to have to either raise taxes dramatically or cut benefits dramatically, or both. And the politicians don't want to do that for some reason.
Well, they're not looking. I mean, they're not thinking outside of the box. They're thinking of, with the we're in the in the horse and buggy era, and we're trying to figure out how to get across town in a mud-filled, rut-filled roadway. But if you turn around and look at everything from taxation in a different way, not income but consumption, you immediately add international travelers, your drug deals, your immigrants that come to the country that aren't necessarily in the in part of the tax code and all. There's so many different groups that aren't contributing to the income tax right now, or not contributing directly to the coffers of the federal government, become taxpayers simply by enacting a tax on consumption, which is a fair tax.
Yeah, so some people don't understand. I mean, people like Elon Musk and Bill Gates, these ultra rich people who make most, if not all, of their income from investment dividends and
Right.
capital gains, buying and selling stock. Those guys don't work for a paycheck.
Correct.
They don't get a W-2. If
Right.
they do, it's very, very small percentage of their overall income and it's only people working for a paycheck who get a W-2 that have these payroll taxes deducted from their pay. So
Right.
it's folks like you and me. Well, I'm retired, but you're still working, and
Yeah.
so they are taking money out of your paycheck every week. And guys that make many, 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 many more times than you do are contributing less, if not anything, to the
Correct.
system. And so it's the little guy that's having to pay for Social Security and Medicare. And again, if you change the taxation model, get
Mhm.
rid of those payroll taxes, and you do that, and people say, you're trying to get rid of the program. No, we're trying to put it on firmer financial footing by
Right.
extending the tax base for Social Security and Medicare
Right.
from just the people who are working for a paycheck to everybody whose spending exceeds the poverty level. And I guarantee you, Elon Musk's spending exceeds the poverty level.
Exactly. Social
He probably
Security.
pays more in tips than the poverty level.
Well, that's probably true. Well, Social Security started out as a 2% tax, and they
Mhm.
promised that they would never go higher than 6% of workers' paychecks. Today, 12.4%, and they still can't cover the costs like that. So,
Mhm.
inaction means benefit cuts of 23% beginning in a decade, 2033.
Yeah. Yeah, this new CBO projection that was originally scheduled that the trust fund would be exhausted in 2035. They backed that up 2 years to 2033. And so,
Imagine the government, and we talked about this with Steve Hayes, president of Americans with Fair Taxation, in the last episode. So go back and look at that and get Steve's perspective on this, because the younger people are the ones that are hanging over the cliff of all the inaction that's taken place, and the result is going to be they won't receive a full benefit when it comes time for them to retire using the current method of funding for Social Security.
yeah, this thing says anybody who is 56 years old or younger today would never receive full benefits because the trust fund will be exhausted before they reach the age where they can start drawing this stuff. And so
Yet they're paying into the system.
they're paying into the system, and it's just a rotten system to begin with. And we've got at least the funding mechanism is rotten. You can debate the merits of whether or not we should have Social Security. There are probably still some that think that's not a good program, but
Right.
most people think it's a good thing and we need to keep it. And not only do we need to keep it, we need to keep it from going broke, which it is doing at a faster rate than they originally figured. And you've got to fix you really got to fix the spending side as well. But more than anything, you need to fix the funding mechanism. Make
Right.
everyone support these programs and not just people that are working for a paycheck.
I think you find that younger folks that are coming into the workforce now, that are getting engaged in how the world works, will eventually realize that there's a need for a fiscally responsible government in their own lives, because we certainly can't spend outside of the money we have. We'd be in jail if we tried to spend like the federal government spends without, of course, they've got the printing press that prints all the green stuff. And so we don't have that benefit. But I think younger people are going to come around to fixing things, the fair tax, a tax on consumption, being one of those major components of what the world is going to look like within the next decade, I would think.
I would hope so. But
a lot of people have there's a stigma about the fair tax, and it's a conservative, it's a right issue, it's a Republican issue, and that kind of thing. I beg the folks that think in a more liberal, social kind of feeling, and I didn't say socialist, I said social, where we take care of people, that there would be more, and this is where we get into the debate about how you spend the money that Washington would collect. But I think folks need to understand that there would be more to do more. at the federal level. And then, of course, the debate would go into, well, how much do you need to spend before you start looking at reducing the deficit? And I think the reduction of the deficit is going to be one of the major debates that has to take place once a fair tax is enacted.
Yeah, well, another interesting point in this CBO projection was how much of a tax increase would it take to keep the system going? Currently, it's like 12.4%, and that is split between the employer and the employee. But of course, you could make the argument that the employee pays it all, because if the employer didn't have to pay it, then you could get that money in your paycheck. But since he has to pay this half of the Social Security tax, that's money that he does not have available to pay to his employees. But this thing says they're going to have to go from a 12.4% rate to a 17.3% rate immediately.
Yeah,
I don't see anything happening immediately.
Right.
Do you?
No, and I don't know that. I mean, the debate on how that would go, and then implementation, of course, would have to filter into the tables, the tax tables, and so on going forward, because it's been 12.4 for quite a while. They just keep raising the threshold for what you make that would be exposed to the tax.
But now they're saying they have to change that 12.4 up to 17.3, and they extrapolated that out a little bit. That would mean $12,250 in Social Security taxes for a median household income of $71,000. You make $71,000 a year, and you'd pay $12,250 in Social Security tax, and that does not even count the Medicare tax that comes in at the same time.
Right. Federal and state income taxes on top of that would bring the tax rate for that particular level of income to about 48%.
So anyway, the bottom line here, the CBO report reveals a bleak future for the majority of Americans who have been forced to pay the Social Security's broken system. We need to fix the system. And of course, the beauty of the fair tax is that it not only fixes the Social Security system, it lights an economic, growth expansion like we have never seen before. And Steve mentioned this, that the fair tax is going to bring in much, much, much more revenue to the government than the income tax ever can, simply because of the increased economic activity.
Absolutely. Jet fuel was what the word Steve used, as opposed to kerosene, which is kind of what's, it's anemic.
Kerosene and jet fuel are actually pretty closely related.
Well, I figured
that's another point here. We won't argue that.
But I mean, you think about heating a space heater in your house versus a jet,
running a jet engine. Yeah. But
I have a lawnmower like that runs on jet fuel.
You have a lawnmower with a turbine engine on it?
Oh yeah. Well, Tim the Toolman Taylor had one, back on Tool Time. Yeah. He had one.
Oh, mercy.
Had a jet engine on his lawnmower.
Okay, so there we go. We need the fair tax to fix the problems with Social Security and Medicare. We got a little less than 5 minutes left. You sent another article up there about tax tables and something that you will not have to deal with under the fair tax. Now, I can't get to that article. You're going to have to explain what most of this is all about.
This came from a website called marca.com. In the personal finance section, payroll tax tables 2023. What is the 2023 income tax withholding table? Well, all it is it's part of publication 17 that how to handle your taxes, and of course employers have to load the tax tables into their software so that they're collecting the correct amount of income. So to calculate the federal withholding tables, FIT, federal income tax, how clever, you should take into account the W-4 details, filing status, and pay frequency. These are all things that business owners have to deal with in terms of time, and time is money. And think about how, as an aside thought while we're going through this, if the business owner didn't have to deal with this, the innovation time that could be spent on thinking about and creating new opportunities within the business it would just be a phenomenal. And this goes back to the rocket fuel scenario. So this article tells about where you find the publications, what are the tax brackets, and so let's take a look at some of this. For instance, tax brackets help you figure out what you're going to be paying in taxes, and they change every year, and it changes this year for a lot. Single filer with an income of up to $11,000 is subject to a 10% tax rate coming next year that you'd be paying April 15th, 2024. Those who earn between $11,001 and $44,725 would owe taxes of the $11,000 plus 12% of the amount over $11,000, and so on. Like a refund. What are the tax changes? How does that affect your refund? Well, the standard deduction for 2022 is higher because of inflation. The standard deduction typically rises a little each year. The standard deduction has been raised for tax year 2022, going from $12,950 for single individual taxpayer, to, for married couples filing jointly, $25,900. That's gone up a little
So you
bit.
got to memorize all these numbers, and the whole idea is that the entire system, which even requires the existence of these kind of things, is so complex and so convoluted that a thinking person would say, that's nuts, let's do it a different way. Let's pull this all out by the roots without Novocaine and replace it all with a fair tax. That's it. I say we got about a minute left here in the show, but that's just crazy. The craziness we see every week with Congress.gov, the constantly shifting sand that the IRS code is built on, the constantly changing tax tables, and the Congress critters are always messing with it to try to give certain groups breaks and other groups penalties and stuff. But it's just such a crazy system that no one in his right mind that was thinking about it for more than 2 nanoseconds would think that's a good idea when you've got the fair tax to go instead.
Go to fairtax.org, sign up, get the emails, get engaged, get in touch with your Congress critters, as Mr. P calls them, Dr. Paxton over there.
Yes.
Little aviator. And let them know, start that conversation now with your elected officials in Washington. Let them know about HR 25, which has been up there for a million years. And
hopefully by the time this airs, this will have been filed again in the new Congress.
Yeah.
So, and I think Buddy Carter from Georgia is going to be the sponsor again. And we need to get all the co-sponsors we had back, or at least the ones that were returning to this Congress, and get more on us. So we can do better than 30 this time around. But that's about all the time we have for this edition of FairTax Power Radio. Again, we thank you so much for watching and listening. I'm Bob Paxton.
I'm Bob Scarborough.
We're the FairTax Guys, reminding you the fair tax is the only truly fair tax, and once you understand it,
you'll demand it.
So tell me how it works.
It's probably changed since the last time I saw it, but the short answer would be, you want to take this one?
Oh, sure. Okay. Imagine bringing home everything you make. You don't get taxed for saving or accumulating wealth, and your boss doesn't get taxed more even if he pays you more.
Wow, now see, that's amazing.
So the end result of all that is the cost of producing products and running a business goes down, so things cost less. And on top of all that, imagine every criminal, non-citizen, and under-the-table worker also paying taxes.
That's amazing.
That's the fair tax. We tax what you consume as you consume it.